You sign the form on a Wednesday afternoon, sitting at a folding table in the HR office of a fulfillment center in Columbus, Ohio. It's your third day on the job. Someone slid the benefits packet across to you at 4:47 p.m., 13 minutes before your shift ends. You flip to the life insurance page. You check the box next to your spouse's name. You hand it back. You feel, briefly, like a responsible adult. That feeling will last for 9 years. If you've ever signed something without fully reading it, stick around. Channel name tells the stories that don't make it into the brochures. The system you just entered is 160 years old. It was built by actuaries, mathematicians who spend their careers calculating how likely you are to die, and at what age and from what cause, and what that probability is worth in dollars. They are very good at their jobs. They're not thinking about you specifically. They're thinking about a statistical cohort that contains someone like you. The distinction matters more than you know. Life insurance, in its simplest form, is a contract. You pay money every month. If you die, the company pays money to someone you've named. That person is called the beneficiary. The naming of the beneficiary is the most important thing you will ever do with a life insurance policy. It is also the thing almost nobody explains to you, ever, at any point in the process. There is a reason for that. The reason is not malicious. It is architectural. You're filling out paperwork in a break room. Nobody has time. You name your wife. Her name is Lauren. You've been married for 4 months. The policy is $250,000 at 2 times your annual salary, standard employer-sponsored group term life. The premium is $6.40 a month, deducted from your paycheck. You will never notice it. That is not a metaphor. You will literally never notice it. It will sit in your pay stub for 9 years, invisible, doing nothing except keeping a promise you made on a folding table on a Wednesday at 4:47 p.m. The years move the way years do when you're not paying attention to them. You leave the fulfillment center in 2017 and take a job at a logistics company in Dublin, about 20 minutes north on I-270. The new job pays $14,000 more. The benefits are better. You get a new life insurance policy, $300,000 this time, also group term, also through the employer. You fill out the beneficiary form again. Lauren's name. Same as before, you sign it. You feel responsible. You move on. What you don't know, what nobody tells you, is that beneficiary designations don't transfer. They don't follow you from employer to employer like your 401k contributions can. Each policy is its own document, its own contract, its own set of named recipients. When you left the fulfillment center, that $250,000 policy dissolved. It was group term life insurance. It existed because your employer paid for it. When you stopped being their employee, you stopped being insured. The $6.40 a month stopped too. The coverage stopped too. Nobody sent you a letter. Nobody called. It simply ended the way a rental agreement ends. Quietly, contractually, without ceremony. You think you have $300,000 of coverage. You do. That part is true, but your understanding of how you got here, the mechanism, the paperwork, what happens if you change jobs again, that understanding is incomplete. An incomplete understanding in an insurance contract is a different thing than ignorance. Ignorance is just not knowing. Incomplete understanding is knowing enough to feel certain when you shouldn't. Lauren has a baby in 2018, a girl. You name her Clara. She has Lauren's eyes and your stubbornness. The pediatrician's office is on Sawmill Road. The hospital bill after insurance is $3,400. You put it on a card. You think about money differently after that. You think about what happens to them if something happens to you. So you do something you're proud of. You buy a private policy. Individual term life insurance. 20-year term. $500,000. The premium is $31 a month. You are 31 years old. You are in good health. The underwriter rates you preferred. The application asks about your beneficiary. You write Lauren's name. You feel, again, like a responsible adult, a thorough one this time. You now have, as far as you understand it, $800,000 in total coverage, $300,000 through your employer, $500,000 private. If something happens to you, Lauren and Clara will not lose the house. They will be okay. You've handled it. You've been responsible about a thing that most people avoid thinking about at all. You deserve credit for that. You did exactly what the financial advisors on YouTube said to do. 2 times to 10 times income. Term life, not whole life. Named a beneficiary, paid your premium. The system worked. You are protected. That's what you think. That's what any reasonable person in your situation would think. In 2021, you and Lauren separate. It's not a dramatic split. No screaming, no lawyers yet. Just a slow fracture that neither of you can stop. You move into an apartment on Kenny Road. Clara is 3 years old. She stays mostly with Lauren during the week. She stays with you on weekends. You put a small yellow rug in her room. You do not update your beneficiary designations. This is important. I need you to understand why, so that you don't hear this as a mistake a careless person made. You are not careless. You are exhausted. You are paying $1,340 a month in rent on Kenny Road and $890 a month in informal support to Lauren, and you are still paying $31 a month for the private policy, and you are trying to figure out what your life looks like now. You are going to the grocery store and forgetting half the things on your list. You are answering emails about logistics operations at 11 p.m. You are not thinking about beneficiary designations because you are a human being in the middle of a painful structural collapse. And beneficiary designations are something you do once when you feel responsible, and then you move on. The divorce is finalized in February of 2022. The settlement takes 6 months. There's a mediator, you divide the savings. Lauren keeps the house, you get the car. You pay child support, $1,100 a month, which is fair, which you agree to, which you pay on the first of every month without fail. Your attorney sends you a checklist of things to update after a divorce. It includes bank accounts, car insurance, homeowners or renters insurance, retirement accounts, passwords. The list is thorough. It does not include life insurance beneficiaries. Most divorce attorney checklists don't. In March of 2022, your employer changes benefits administrators. This happens without any announcement that reaches you. The HR system migrates. Your old elections carry over. Your health insurance, your dental, your vision, your 401k contributions. The life insurance beneficiary designation in the transition does not carry over cleanly. This happens. It is not rare. Benefits migration errors are one of the most common sources of beneficiary designation failures in employer-sponsored plans. What you have now in the system is a beneficiary field that reads either Lauren's name or, depending on which screen in the new portal you look at, blank. You don't check. You have no reason to check. As far as you know, nothing changed. You meet someone in 2023. Her name is Michelle. She's a project manager. She has a daughter about Clara's age. You date for 14 months. You get engaged in April of 2024. You feel good. You feel like your life is reassembling itself into something that makes sense. You do not update your beneficiaries. This, again, is not negligence. You're planning a wedding. Michelle is planning a wedding. You're trying to figure out which apartment to move into, hers or yours, or neither, a new one. You're thinking about whether Clara will adjust. You're thinking about the seating chart. You're paying for a caterer and a photographer and a florist. And you are also, somewhere in the background, paying $31 a month to a term life insurance company that still has Lauren's name on the beneficiary form. In June of 2024, a driver runs a red light on Bethel Road and strikes your car at 47 miles per hour. You are killed on impact. You are 37 years old. You have $800,000 in life insurance. You've been paying premiums without missing a single one for more than a decade. Michelle finds out about the private policy from a folder in your file cabinet. She calls the company. She explains who she is. She explains that she is your wife. You were married in October, 8 months ago. The company is polite. The company is thorough. The company tells her that the named beneficiary on the policy is Lauren, your ex-wife. And under the terms of the contract, the named beneficiary receives the death benefit regardless of subsequent marriages, regardless of divorce, regardless of anything else that happened after the day you signed the application form. This is not a trick. This is not a technicality. This is how life insurance works. The beneficiary designation is the final word. Courts have ruled on this repeatedly. In most states, divorce does not automatically revoke a former spouse as a life insurance beneficiary. Unlike with retirement accounts, where some states have revocation upon divorce statutes, life insurance follows the contract. The contract says Lauren. Lauren gets $500,000. Michelle calls her attorney. The attorney explains that she could contest the designation. It would take time and money, and there is no guarantee. The attorney has seen this case before. He has seen it many times. The employer-sponsored policy is more complicated. Because of the benefits migration error, the beneficiary designation is unclear. There will be a claims review the insurance company will investigate. Lauren will be named in that review too. Michelle may get some portion or none. It depends on what the review concludes. It will take months. What this means practically, Michelle is a widow with a stepdaughter and a mortgage and no emergency fund.